So welcome to today's podcast. So today we're going to be covering a series, a three-part series with Jeremy Kessler from Steel Breeze Accounting and Tax. Now taxes, it feels like we're talking about it all year round. It's such an impactful aspect of our lives. And for most people, certainly those with success, it's going to be the biggest expense probably most people are going to have to face, unfortunately. And if you ask any accounting professional, most say it's here to stay and likely to go up in future years. So this is just a short little three-part series to help you get educated around taxes, what you can do legally to mitigate taxes, and even in some cases, do it to support what the government actually wants us to do. And so in this first part of it, we're going to cover some of the thoughts that from Jeremy from this year's tax season. What did he learn? What insights does he have to share with us as we start thinking about tax planning for the future and how we can attack it? Because there's a lot of nuances and complexities around the tax code. And that's why it's so important to get tax professionals to help and certainly try to plan ahead and try to put things in place, because sometimes you may not be able to do them in short notice. So the more you know, the more you can get ahead of these things. So enjoy part one, where we kind of cover some of the insights from this year's past tax season. Enjoy. So welcome to today's podcast. I'm here with a good friend and partner of mine, Jeremy Kessler with Steel Breeze Accounting and Tax. And for those who you may have heard him on other podcasts, he joined me previously. We'll put that in the show notes too, so you guys can reference it. But we're here back with Jeremy because I just like anything in life, things don't stay the same. We're always hopefully learning and growing, and taxes is one of those crazy topics that is uber complex. And I'm just so appreciative to have good experts like Jeremy to run things by and get his expert opinion. And I'm sure you're going to get tremendous value from our conversation today. So Jeremy, thanks for joining me again.
Yeah, thanks for having me, Tom. Always awesome. A pleasure.
Yeah, always have to try to catch it too. It's like, feels like tax season goes on forever and ever now these days.
It really does. I mean, there was so many. I got killed with extensions this year, and I knew what I had on my plate, and then I had new clients coming in last minute, and some of them were kind of big, and I was like, it was a little frustrating, but I still accommodated them. So.
No, I know that's the kind of guy you are. And so, this is where we always joke around, taxes can be a topic no one really wants to talk about, like death, right? They kind of go together. It's inevitable. We have to, face both, but they're not fun topics. I think we often have good topics, positive talks around it, because there are some things you can do and it actually may help this country by doing that, right? And you can save some taxes. So there's a positive angle to this. And so on today's podcast, we're really going to focus on kind of maybe three parts. And I can look at it this way, like obviously what did we learn from this year's tax season, right? From a tax expert, right? What did he see? Jeremy, what did you see? And types of things that maybe helps us as taxpayers maybe improve what we're doing tax-wise. And we'll focus on what we could do kind of in the future, right, to maybe mitigate taxes legally and be aware of certain things. And then, think about even farther in the future, right, as we're kind of 3, 4, 5 years out. We obviously don't know what's going to happen. There's a lot of uncertainties. There's, a lot of things going on in this world for good and bad. That can change things, but based on what we know, like what can we do to prepare? What should we be thinking about down the road? So we're going to break it up in those three buckets. But before we get into the nitty gritty of stuff, I wanted to share a couple jokes because, I don't want to take this too seriously, right? This is hopefully a lighter conversation, and this is not tax advice. I just want everyone to know this is, anything we share on these episodes is really strictly for your information, and you certainly should talk to your advisor about it or reach out to Jeremy. He's great. He'll give you a free consultation. So Jeremy, as we're ending, the summer months into fall, golf is sort of ending for us at least. So why are taxes like golf? Because you work hard on the green just to end up in the hole.
Oh my God.
Yeah, I like that one. That was a good one. So you and my wife laughed at that one. She hates golf. The second one, obviously, we're coming up on Halloween, the time of this recording, and I know you and your family are big into Halloween and dressing up, and so you're familiar with the Avengers, right?
Yep. We were once the Avengers. We did
That
one year.
that's right. That's
It was
right.
two
Right.
years ago, I think.
Okay, so then this
Yeah.
one you might be able to get this one. So, which Avenger pays the least taxes?
You got me on it.
Spider-Man, because his income is all net.
Oh God.
Oh man. So we always joke, it's like it's not what you make, it's what you keep, and that's a net. So it's important. Spider-Man.
Let me tell you something. I'm never going to use either of those jokes.
Oh, they're good. They're good. Listen, take them for what they're worth. Like you can joke around these things, but
Yeah, yeah.
in all seriousness, like the taxes can be serious, and a lot of what we try to share on this podcast is to try to share the truth around finances. Try to not be so serious about everything with it because there's other things in life to bring us joy and happiness, and I think unfortunately for a lot of people, taxes feel like they put a stranglehold on people's lives in a whole host of ways, certainly financially, and it is a big burden that is hard to get away from, right? So this is hopefully these episodes will help you break free a little bit and give you some ideas for the future. So to get things started, Jeremy, I'd like to maybe get you to share a little bit of your thoughts. Now you're kind of coming off the kind of big part of the tax season. Obviously, we're going to come up again in April, but maybe you can share any big sort of ahas or insights from this year's tax season and how that might help our business professionals and families going forward. Anything big ahas from this year?
Yeah, definitely. And I think you hit the nail on the head. No one wants to pay taxes, right? And I think what that causes sometimes is people avoid going to their accountant right away and getting their things together. And all that does is it increases your tax bill because there's penalties and interest that you end up paying. And the common misconception is, the April deadline, that's when taxes are due, right? If you miss that deadline, you extend. It's an extension of time to file. It's not an extension of time to pay. So
Mm.
if you owe a bunch of money, then all you're doing is just exacerbating the whole thing. So,
Mm.
and I saw a lot of people come in, they did owe money, and that's exactly what happened. And then they're like, oh, what's all these penalties and interest? And I'm like, well, you came to me way too late. And these are new clients typically. I have like my clients that are recurring, I have them down to a system and they know all these things because I tell them, but it's the people that come in and they're a new client and they're like, oh, I always do my own taxes and, I extended myself this year and then they always say, I think I'm probably not going to owe anything. And then I have to give them the bad news. I have to be the bearer of bad news. And it's kind of a bummer from my standpoint to have to do that, but it's also on them because they're the ones that procrastinated and they did so because they just don't want to deal with it. And if you just get ahead of it, then I can help you more and you'll probably end up paying less. And some of it might be because they don't want to pay an accountant. I don't know really what the reason is, but the fact is that if I can look at your tax, your structure and whether it be that you're a business owner or a W-2, and I could say, well, you could do X, Y, and Z before year end to reduce your liability. If you're coming to me after the fact, then there's nothing I could do about it in most cases.
Yeah, and it gets back to the simple stuff like planning, and there's certainly some costs associated with it. But the way you describe it, it's like okay, it's going to cost you now or later. You can choose, and the later
Right.
one actually might be bigger.
Yes.
So why not get advice from an expert and help you plan and get ahead of it and sort everything out, and maybe even identify opportunities, which we'll go a little bit more into in this conversation. But like get ahead of things before you end up kind of last minute hustling trying to get something done quickly, right? And you're paying extra interest and penalties. Like the government's not giving away free loans as far as I
Yeah.
learned these days, right? They got more bills on their plate as is, right?
Oh yeah.
Running deficits like out the wazoo. So they're not going to let us just get free loans to delay our tax bill.
And I think, especially for business owners, we always split up business owners versus W-2. And business owners especially, it blows my mind when I see that they're doing their own taxes, and some of the ones that have come to me that are new, they're using TurboTax, they're doing it themselves, and I'm like blown away. I'm like, you don't know some of the nitty gritty that comes with this that, can save you a bunch of money. And I think those particular people are not using an accountant just because maybe they think it's too expensive. But it's there again. I'm going to save you much more money than if you had done it yourself, and put you maybe in a better tax structure to save you money each year going forward.
Yeah. And obviously we're talking about money in terms of, to your point, of broader overall savings, and some of the stuff that you can do can help every year, right? Once you start putting it in place. So it
Right.
isn't just a one-time hit, which a lot of people really focus on in a given year, but these things could go hopefully in perpetuity, or unless laws change or whatever. But getting that started is paramount. And it's one of the, to your point, like the topic that no one really likes to talk about. They feel like, oh, okay, if I don't look at it, it's okay. Like I
Yeah.
don't, if the market's down, let's not look at my account.
Yeah.
Maybe it'll be fine. But it's like, okay, let's just deal with it. So, for some of the clients that have come to you, who are, I guess, let's flip it a little bit. Like for ones that you see that are working well, you said you got the processes down, you got them like, what are they actually doing maybe differently than most people? Is it just getting ahead of it? Is it just being organized? What are some things you see that they're doing that helps them sort of reduce their stress and certainly amounts of paid in taxes?
It is. It's about being organized, and it's about, if you're a business owner, let's say, getting the estimated payments in to make sure that you aren't paying those penalties and the interest. And there's an IRS safe harbor where if you pay 110% of your prior year tax liability, then you can't. There's no way that the government can assess penalties.
Hmm.
So there's things about getting into a rhythm with it. And the problem with the people that come in late is that they're filing their taxes in October. How can they make sure that they've paid the correct estimated payments for the whole year if they're doing their taxes so late?
Right.
Because based on that 110%, you're already in October. So if you're like way behind at that point, you only have a couple of months to make it up. And also the IRS is a pay-as-you-go system, right? So if you're getting to October, you haven't paid all the way from January to October. You only have those 2 months left, so you're still going to get hit with some penalties and interest on those last 2 months.
Right.
So
Right. Right. Because you haven't paid all year. They're like, you can't just pay at the end and be okay.
right, so it's going to be accruing the whole year, and it's tough to get out of that constant procrastination. You really have to make the concerted effort to just bite the bullet. And let's say you're a business owner and you have an 1120S, you got to file on 315, and if you're a Schedule C, you got to file on 415, and just get it done so that then a professional like me can set you up for estimated payments and make sure that you are paying throughout the year.
Right. 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 Yeah, and then I think that's I think business owners is probably more opportunities for, and there's a lot more complexity, right? As you're a business owner, a lot of things to manage and account for more so than a W-2 earner. But like I think people with jobs think that they can't really do a heck of a lot anyway. And we're going to go into a little bit of that kind of in the second phase. But like I think it becomes an easier thing to just kind of let it ride, because you feel like, a lot of accountants tell their clients, like, there's nothing really you could do
Yeah.
to save on taxes, which is either just part of me, like to me, I think it's lazy. I think people, they should just don't know, right? Not seeking it out, and they're not doing well for their clients because of it, right? And so they tell them, I hear that a lot from clients and people that I run across. They're like, my accountant tells me I can't do anything. Well, maybe it's time to get a new accountant.
Yeah.
Right? That maybe is actually proactive and looking into these things like you do. Like, so then, if they're willing to meet with you occasionally, then you can at least share some ideas, right? And get ahead of it, as opposed to scrambling at the end and then there's no options or very few. So how, like, and I guess, as we here we are in October. Are there certain things like, obviously when you're finding extensions and having to pay, like, if you were to share that with business owners or even W-2 employees, like just one thing that they can do differently that most people are not doing, like what would that be?
So just thinking about business owners, the biggest thing that I see when someone comes to me, and it's like they've never analyzed their tax structure, right? It's for the most part they come and they're Schedule Cs, which is just a schedule on the 1040, and that's the easiest thing to do. There's nothing to do. You could start selling something and be a Schedule C. There's nothing to fill out. There's no extra forms, so it's very easy. But and I would say that that's for like people that are just going to do like a side hustle. If you're just doing it's like a little bit more than a hobby, but not totally a hobby. Once you start gaining traction and making some good income, then there's 1120S that you and I talk about all the time, and that structure just gives you so much more flexibility. I mean, you're supposed to have a reasonable salary attached to it. I've never seen in my career the reasonable salary be challenged in an audit. And then there's other things that come into play too. Once you go over that structure, there's qualified business income, and you can move. You can play with the salary in order to make sure that you're getting the full benefit of that. There's so much more flexibility in that tax structure if you're more than a side hustle. And I see that so often where a client comes in and I'm like, at this income level, why are you a Schedule C? Hasn't anyone, talked to you about this other tax structure? And the answer is always no. I don't know why, but
Yeah.
and then they're leaving a lot of money on the table by not being in that structure.
Well, I think a lot of these things too, and before we start recording here, we've talked about certain things where there's, some tax strategies or approaches that don't come risk free, right? There's risks associated with them, and you just got to understand that. But once you start learning more about them and get comfortable, obviously in our eyes, the risk goes down. At least you know what you're dealing with. And I think some of these things are just there's maybe a misunderstanding about them or an added risk, so you kind of just poo-poo the whole thing,
Yeah.
right? And kind of move on and don't dig in. And it still might not be right for people, but this is why you kind of just have to sometimes spend a little time learning it, because then you kind of realize it's maybe not as scary as you think it is, or you kind of learn the truth, but you still might decide not to do it, and that's fine.
Yeah. And that's like the W-2 folks, saying that they can't do anything. That's not true. Especially this time of the year, there's still some time left to get into some of these different opportunities that you and I have spoken about, leverage deductions and oil and gas and all that kind of stuff, where not everyone is engaged in it, but it's you and I have done due diligence on it, and it obviously there's some risk to it, but it's a risk that a lot of people I think are willing to accept.
Yeah. And we're definitely getting to that next. But the last thing I would want to just ask your opinion on from a tax expert, because it's always interesting. And I grew up thinking this too, like, okay, yeah, I get a tax refund. Woohoo! I'm rich. Like, I get a refund. The IRS loves me. I'm getting my money back. Well, in reality, we're handing money off and giving them a tax-free loan for a while, and then they return it to us.
That's
right?
Exactly right.
Interest-free loan, right? So it's like, how do people? So for folks in that word, it's like, how do you help manage them so that you're paying an appropriate amount, right? So you don't get penalties or interest and such, but you're not getting a massive refund, right? And to at the end, like, I mean, tell me more how your opinion on that.
The best thing to do is break even and have no payment or a little payment or maybe a little bit of a refund. And that Tom, there's so many people that come to me and I have to explain that. I say, look, you're not getting money back. That's your money. You've already paid that in. The IRS isn't giving you money. Like, oh, you did a great job this year. Like, here's some money. No, that's not how it works. It's called a refund for a reason. It's a refund of the money that you've paid in. So, but a lot of people are like, they love to be in a refund situation. And there's different ways to save money. I mean, I think some people think it's a sort of like a savings plan, but that's a bad savings plan.
Yeah, there's no interest on that one.
No.
Yeah, no, and try having them pay you back fast too. Um,
Exactly. I'm like, oh, I've seen amended returns that have taken 7, 8 months to get the refund.
that's right, right. They're gonna take their time, and time is money. So listen, so that's great. It's good little recap, good reminders, and certainly for folks that are certainly growing in complexity in their personal lives and businesses, it's really important to kind of get with a good tax advisor, an expert, an accountant to help you kind of just plan it out and sort of get organized, because it will actually reduce a lot of stress for everyone's sake,
Yeah.
accountants and taxpayers alike. So it's really important to try to get ahead of things. So thanks for joining us on this podcast. Hopefully you got some value at it, and as you're thinking about ways to maybe attack your future taxation. And so the next part of this series, we're going to cover what you might be able to do leading into the end of this year. We are, at the time of this recording, it's closer to the end of the year, but there are still some things you can do to mitigate your current year tax bill when you go file next year. So join in, and hopefully you get a tip or two that can help you out. And certainly always seek out your tax advisor for support and expertise.